guys, welcome back. For the first time ever, my portfolio has closed the day over $170,000. For those of you who don't know, this channel is about one guy, me, who tries to get his portfolio to the legendary amount of $1 million. Alright, I know 170K, we're still pretty far off. It's like only 17% of the way there. But my mental game is that it's only like 3x away, because 170 times 2 is like 340 or so, times another 2, that's 680, times another 2, that's 120, give or take a little bit for taxes and stuff. So we're only 3x away from there. I can easily just throw it into like some random like stock like Open or some other random stuff that just 3x's my money in one day, but that is way too risky, and this is my hard-earned cash, so I'm not gonna piss it away like that. You guys are welcome to come along for the journey, copy my trades. I'll be doing like shorts every day to be so then you guys can copy the trades. I'm thinking about starting a Discord or something, or you could just join my Discord and you just, get an inside look on my trades from there. Okay, so starting out, what worked versus what didn't work. Alright, just very quick overcap. What didn't work for me was earnings plays, short dated calls, zero DTE calls. Those crushed me. Zero DTE, iron condors did not work, and the poor man's covered call didn't work either. Some examples of earnings gambles that I did was on Lulu and Oracle. All right, basically I was a little bit lazy, so I just copied trades from Tasty Trades. And they're doing all this like, oh, iron condors and expected moves and all that stuff. But I think this market is like primed for exaggerated moves, like companies who are doing really well or have been performing really well, and then the earnings call comes and they want you to do even better, and then you just miss like by 2 cents or something, and then you just plummet like 20%. And like most of the options are only pricing the expected move of like 17% or like 12%, so then you're out of the cold, you're out in the cold. That happened to Lulu. My put spread was 175, but it blasted to the downside and it closed at like 168 or some shit, and I lost like a couple $1,000s on that. And the next time I copied another trade from Oracle, they were like, oh, the upside will be recent all-time highs at $260. As we all know, that did not happen. Larry Ellison pulled a good one from his butt crack, and then the stock went on like literally, it went like the single day move was like game breaking. Like they never had a single day move that high before since like the 1990s and the dot-com era. So these moves are very exaggerated. I'm stepping away from doing earnings plays from now, unless I want to gamble and then take like one or two. Alright, we're gonna stop doing earnings plays from Tasty Trades. Another one, short dated calls and puts. Alright, actually let's break that up to short dated calls. I used to do 0 DTE SPX or XSP calls, thinking that I was a genius or I was timing a bounce. As you can see from like, let me see, SPX in the last like September to like August to September, this was not good. It was too much up and downs. You would have just been way better off just freaking buying a call like 1 or 2 months out and just riding this whole thing up. Don't be a freaking idiot like me and then try to play the bounce and all that stuff 2 ways or whatever. No, don't do that. Doesn't work. And puts too. So I tried to use puts to like, oh yeah, I missed the upside, so I'm gonna catch the downside. Doesn't work. All right. So just if you're gonna buy puts and calls, make sure they're far out in time. I want to say somewhere around like a month minimum. Just to play it safe, I'll do like 45 to 60 days minimum. That's how far away I buy my calls. Most of my money is in leaps. Another strategy that didn't work, I think it just didn't work for me, was selling poor man's cover calls on my leap underlyings but I was holding stock like Google and Hood, which were very explosive when it wants to explode. It was like bam, and then you like miss the move, and then you're now back holding calls that are like freaking deep in the money, and you try to roll out of them. And I just spent a lot of time trying to roll around and do all that shit. So I am removing all of my calls, not calls, all my poor man's cover calls. Essentially, my bearish positions. All right. Now let's focus on what did work for me. Leaps. So my most profitable plays are from leaps, yo. I'm telling you. Here, let me just pull this up. Back to the thing before I get distracted. What plays that I do that did work are leaps on undervalued stocks and stocks that have hidden catalysts. Some examples that I have of like undervalued stocks is like United Healthcare, Google, and Toll Brothers. I think United Healthcare and Google, they're like kind of getting priced in now, so it's moving more towards like the fair value zone. But Toll Brothers, it's still like below retail radar. Maybe the smarter guys are picking it up, but like with lowering interest rates, people are going to start buying homes, and then Toll Brothers is a home builder, so they're going to start building homes. United Healthcare, I really like to see this stock at around 450 before it starts being fair value, but they've been like beaten down because of like the health insurance scare and all that stuff lately, DOJ probes and like all that stuff. But I think when like the DOJ comes, be like, yo, slap on the wrist for you, you get like a $500 million fine or whatever. Like when investors hear that, they're like, oh, $500 million, we make that in like a quarter, or we make that in like a month, and then boom, the stock is gonna go straight back to like 600 or something. So that's like a hidden catalyst. You gotta kind of look in the future for that. So I have calls in place like throughout the year to try to time when that's gonna happen. Google, it had this DOJ probe. Once again, another DOJ probe dropped in like the best case scenario for Google. Its Gemini AI is gonna start coming along. Its Waymo is gonna start coming along. Its ad business is already on fire. People are like, oh, ChatGPT is gonna take Google's business. It's not. I don't think it is. Even if it is, like Google has their own like Gemini. They have Android. They have Chrome. They have YouTube. It's literally like such a big cornerstone of the internet that it's not really going anywhere. I think not even Facebook can beat Google, even though they're priced like they can. But I don't really think I like Google's products more than Facebook, just personally. Another stock that had a hidden catalyst was Robinhood. I bought in when it was first mentioned that it might be included in the S&P 500, but that's already come to fruition, and there was like a 15% pop on that day. So that hidden catalyst has kind of been exposed. And the last stock that I'm like starting to like build a really big position in is SoFi. A lot of other people, YouTubers, are saying SoFi, but just SoFi is just a really good stock. Like I believe in its like compounding synergies and like just everything in general. Let me show you guys how much money I have in SoFi right now. I have one share. No, I'm just kidding. One share and like there you go. I'm running nearly 60 strategies on SoFi. These are like short-term YOLOs. I have nearly $20,000. That's like roughly 10% of my portfolio. A little bit more than 10% of my portfolio is in SoFi. United Healthcare. United Healthcare, I have like 14,000, which is roughly 10% of my portfolio. So I like to keep positions in like around 10% of my portfolio. Not too exposed, not overly exposed to it. Oh, look at my 21 cents Google dividend. So yeah, Google, I only have 4. I used to have like 8 of these, but it's just moved up so much, so I started trimming a little bit, so I only have like 20,000 left in here. And this is my Oracle play that got blown up. I'm down like 3,000% on it. It's like not that bad. I only lost like 300 total from that. Adobe. Alright, so this is actually very interesting. This is my SPY call roll. So when this thing reaches 50% or so, which is if it moves up another, you know, 0.18%, it's gonna be 50%. I'm gonna roll it into the next position or wait for like a red day to roll it. Super cool little strategy. It's called a spy call roll.